Now, before I wanted to know who I am talking to. Okay, so all of you are registered for June and you have already done your audit and assurance, like you've completed your syllabus. Is that correct? Can you just type it in the chat box? Mariam, yes. Yes, okay. All of you have done your OLAID Victoria. Victoria, I have received your message, which is about a question from the exam kit. So that is why we are I am going to welcome you. Right? Give me a second. I take some time to welcome people. Okay, guys. So let's get started. This is my name. My name is Shaz Faruqi. This is my contact number. If you want to get in touch with me for whatever reason, you can take these details down. I am the co-founder of Finchartered Academy and the faculty also at Finchartered Academy, right? So let's get started, right? First and foremost, this foremost, what I'm going to do is, again, we're going to run quickly through the syllabus in this marathon session. Okay, and please don't expect me to go slow because it is a marathon itself, right? So I will be covering all the core topics of audit and assurance in this marathon session, and I hope that you will find it useful. The first and foremost, although it is easy, I don't want to start the marathon session without introducing to you what is audit and what is assurance. I wanted to introduce both what is audit and what is assurance to you. And my way of teaching is where I will give you analogies and examples for everything. Right? And the example and the analogy is this. Let's imagine a scenario where you find a recording will be uploaded on the LMS. Yes. So what is audit? Right. Let me draw and explain. Okay. Imagine this is the company. For whatever reason, in all my recordings, the company is a square. Okay. The company prepares what? A piece of paper in which there is a lot of information about the company. These papers are known as financial statements, correct? So the company prepares the financial statements, yes? Now, the company is run by its directors. So the directors are running the company and the company prepares the financial statements. Now, the thing is, there are a lot of people who will look at these financial statements, right? 1, 2, 3 people who want to have a look at the financial statements, right? They want to check if everything is correct, if everything is true, is everything fair in these financial statements. They want to check if everything is true and if everything is fair. So what do? They appoint a detective, they appoint an investigator, they appoint a person who will go and do their jasusi. Jasusi means they will go and investigate, they will go and examine these financial statements and check if these financial statements are true and fair. So this appointed person who I have put in black, he will examine the financial statements on behalf of these people. He will examine the financial statements and give his opinion whether the financial statements are true and fair. This act of examining the financial statements is known as audit. So what is audit? Audit is nothing but just examining the financial statements, checking if the financial statements are correct, doing some procedures, doing some investigation to check if the financial statements are true and the financial statements are fair. This examination of the financial statements, this investigation is known as audit. So basically, guys, all of you are becoming detectives by doing this paper. You are learning how to go and investigate. So I hope all of you are with me. What is audit? Audit is basically going and checking, going and inspecting, going and examining the financial statements. All right. I hope that is clear. Again, normally the ones who have been attending my classes know that I go in more detail. But again, because this is a marathon, let me move on to what is assurance. And I will tell you what assurance is with the help of an example, which is also there in my demo. And the example is this. Again, there's a scenario, right? You are going for a wedding. You are all nicely dressed. You've worn your suit, you have your hair, set. You are all ready to go for the wedding. Okay. Now, before you go outside your room, and you leave for the wedding, you ask your brother, how am I looking? So your brother just looks at you. He just gives you a 1 look, 1 second look, 2 second look. He just sees if you are fine. And he looks at you and tells you, yeah, everything is okay. All good. So what is your brother doing here? Your brother is giving you confidence that everything is okay. That is what assurance means. In our life, I am sure there are about 25 of you in this class. I am sure at some or the other point in your life, either you have given confidence to someone or somebody has given confidence to you. I can give you another example where after the exam, you are worried. So your mother comes and says, don't worry, you will pass. You wrote all the questions. You did the exam kit. So you will surely pass. So your mother is coming and giving you some confidence, correct? And you get what? You get the confidence. You feel confident. This act is assurance. Right? Okay, this is assurance. Assurance is basically giving confidence. So what is assurance, guys? Assurance is where We are giving you confidence about something. Assurance is where a practitioner obtains sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of the intended users. That is what assurance is. Can you all share my screen, guys? Is my screen visible? Yes, okay. So, Mariam, you will have to check from your end because I am sharing my screen. Okay. I will give you one more example of an assurance. Okay. And I gave this example in my class. The example is this happened with me in real life. Okay. So I generally have a habit of using real life scenarios and examples to explain things. Right. And the scenario is basically where there was a cockroach in my bedroom. So I was worried. I asked my friend, hey, can you go and check if it's there or not? So what did my friend do? My friend went inside. He checked the full bedroom. He moved the bed. There was no cockroach. Right? There was no cockroach. So then what did he do? He came out and he told me, I have checked your room and there is no cockroach. So don't worry. So what is assurance? Assurance is basically where somebody is gathering sufficient appropriate evidence and then coming and giving a conclusion to you that will enhance your confidence. That is what assurance is. So from an audit point of view, what does this mean? From an audit point of view, what it means is, see, coming back to what an audit is briefly, just bear with me. But the company has prepared financial statements. Yes, the company has prepared financial statements. Now, the shareholders or the owners of the company want to hire a detective to go and investigate these financial statements. So they hire us. We are blue in color. They hire a detective to go and investigate these financial statements. This investigation of the financial statements, this checking is known as audit. And this detective which we have hired is the auditor. So the process of examining is audit and the examiner is known as the auditor. The process of investigating is the audit and the investigator is the auditor. So we go and we audit the financial statements. Audit means what? Audit means investigate. We check the financial statements. And after checking the financial statements, what do? We come back and give our opinion. This opinion we give to the users. We come back and give our opinion. What our opinion is that we have checked the financial statements, we have audited the financial statements, we have examined the financial statements, and the financial statements are true and fair. The financial statements are what? The financial statements are true and fair. So we are giving an opinion, and after hearing this opinion, With our opinion, what are we doing? We are increasing the confidence of the users. We are making them more confident. See, they have become confident. So this is what assurance is. So audit is what? Audit is checking, examining, investigating. Assurance is after examining, after investigating, when we give our opinion in order to enhance the degree of confidence of the intended users. That is what assurance is. Okay, so what is audit, guys? Audit is basically examining financial, basically examining, checking, investigating. And what is assurance? After checking, after investigating, after examining, when you come out and when you give your opinion such that the person's confidence increases, that is assurance. One final example, and then I will move on. Just bear with me. One last example, okay? You feel there is an insect in your food. You ask your sister to check the food. This checking, when your sister is checking, your sister will do some procedure. She will use a spoon. She will move the food a little bit. She will see if the insect is there. This checking, this examining, this investigation is known as audit. After the audit is over, what will your sister do? Your sister will give her opinion. She will give her opinion and say, there is no insect. This is her opinion. I have checked everywhere. Why? To make you confident. This giving of opinion in order to increase the confidence of the intended users is known as assurance. So not only will you audit the financial statements, but after auditing or checking the financial statements, you will give your opinion about the financial statements in order to increase the confidence of the shareholders. So I hope what is audit is clear and what is assurance is clear. Okay, guys, everybody happy? Just quickly type. Quickly, fast. Everybody clear? Everybody understood the examples, analogies? Fast, 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 fast. Very good. Now, I will tell you about two types of assurance, reasonable and limited. And believe me, with this example, you will never forget it. Reasonable assurance and limited assurance. What do I mean by this? Is this. This session is 4 hours. 4 hours का session. आज we will do the textbook. कल exam kit के questions we will solve. Anyway, the next thing I'm going to talk about is limited and reasonable assurance. Look at it this way. I gave this exact same example in my first class when I was teaching audit and assurance, but the example is this. The same example. You are going out. You are ready. You have worn a suit, nice shoes, nice hairstyle. You are ready. You are looking at yourself in the mirror. Right? You ask opinion from two people to increase your confidence. Okay, generally this, let me take my example. The first person I will ask for opinion is my brother. And the second person who I will ask for opinion is my father. Okay. Why? I want their opinion about how I'm looking so that I can feel confident. So I ask my brother, okay, how am I looking? So he just quickly looks at me. He doesn't look at it in detail. He just quickly looks at me, just for brief, and tells, yeah, all okay. So first scenario, what is happening? He's not looking in detail. He's just looking upar se. He's just looking very brief. He's saying, yeah, all okay. So he is also giving me confidence. He's saying everything is okay. He's also giving me assurance. And he has given me confidence that everything is okay. So my brother is giving me assurance that everything is okay. Then I ask my father. My father looks at me in detail. He will look at my suit closely, see if there are any stains. He will see my shoes, see if it's polished. He will see if any price tag is still on my clothes. He will thoroughly check. He will thoroughly check. He will thoroughly investigate. And then give his opinion. Basically, he will say, yes, you are looking good. So my father is also giving me assurance. So both my brother and my father, both are giving me assurance. But my brother is giving me limited assurance, as you can see. So limited assurance is where we are performing fewer procedures. We are not going in detail. My brother just saw me for 2 seconds and said, yeah, okay. This is an example of a limited assurance. Limited assurance is also intended to increase my confidence. But what my father is doing is he is doing the procedures more thoroughly. These thorough procedures that are done in detail when we do procedures, in detail when we check, in detail when we go and do everything, that, and then when we give our assurance, that assurance is an example of a reasonable assurance. Okay. So I hope this is clear and I hope everybody is comfortable with this. So limited assurance is where we are just doing a few procedures. We are not checking in too much detail. So limited assurance performs fewer procedures versus reasonable assurance performs more detailed, thorough procedures. Like my father in detail checked my clothes. So that is, and then he gave me his assurance. So tell me one thing, guys. In my brother's case and in my father's case, both are giving me assurance. But in which case will I feel more confident? Father's case or brother's case? case? Everybody type. Which case will I feel more confident? Father's case. This is the advantage of having a reasonable assurance done. Reasonable assurance gets you a higher level of confidence. Reasonable assurance gives you a higher level of confidence. But a limited assurance, when my brother just saw me for 1 second and he said, yeah, okay. That gives me a comparatively moderate or lower level of assurance or confidence. Moderate or lower level of confidence. Okay. In both cases, both is assurance, both are giving me confidence. My brother is saying, yeah, not bad. Now, generally, when I ask my brother, you know what he will say? Now, in my case, in my brother's case, he will say, unfortunately, he will not say that I am looking good. Right? He will take the example of some, some old person, some funny person, and he will say, you are looking like that. But even if today he is in a good mood, he will just say, I don't see any problem. I'm looking nice. But he will not say you are looking nice. He will say, I don't see any problem. But my father or my mother, after checking in detail, he will say, wow, my son looking so handsome. See, in both cases, my brother is also telling that there is no problem. And my father is also saying there is no problem. But the difference is the choice of words. My brother has negatively worded it. He has said, I don't see any problem. Yani, there is no problem. Yani, I'm looking nice. But he's not saying you are looking nice. He's saying, I don't see any problem. So limited assurance is negatively worded. But a reasonable assurance is positively worded. So from an audit point of view, what I mean by this is, if you're doing a reasonable assurance, these are the financial statements, and you're doing a reasonable assurance, you will word it positively. You will say that in our opinion, everything is fine. The financial statements are true. Financial statements are fair. So you are wording it positively. But if you're doing a limited assurance, you will say, I don't see any problem. Again, it's negatively worded. They could have said that everything is okay. They could have said everything is true. They could have said everything is fair. But they are saying, we did not come across any problem. One final example to explain this negatively worded and positively worded is, suppose you go and show your father a new house which you are going to buy. And suppose the house is nice. If the house is nice, there are two ways your father can say it. One way he can say, the house is very nice. It's fair. It's lit. It's well ventilated. This is positively worded. Second case, also he liked the house, but he is wording it in a negative way. He is saying, I don't think there's any problem with the house. This is negatively worded. यहाँ पे भी आप वही बोल रहे हो. Even over here, you're saying the same exact thing. You're saying, go ahead, buy the house, but you have worded it negatively. So a reasonable assurance is positively worded and a limited assurance is negatively worded. Okay, I hope everybody is clear with this. So far, what have we looked at? We have looked at what is audit, what is assurance, what is limited and reasonable assurance. So which type of assurance there will be more work for the auditor? In limited assurance or in reasonable assurance? Where will the auditor have to do more investigation, more checking? Which type of audit? Which type of assurance engagement will the auditor have to do more work, more checking? Everybody type. Everyone. Reasonable. Exactly. Okay, so we've done what is audit, what is assurance, limited and reasonable assurance is also done. Then comes expectation gap. What do I mean by expectation gap? Expectation gap is, I'll give you an example for this. What do I mean by expectation gap? Okay, I have a habit of taking feedback from my students, which I will do at the end of this session. Okay. Now, once I took a feedback from some students. And most the classes are good. Everything is clear. Sir explains in detail. One feedback I got once, which said, make me feel good. This was one feedback I got. I went to one class and I said, you give me your feedback anonymously. And this is the fourth feedback. It was like, make me feel good. Now, I'm not your therapist, correct? I'm not your your counselor. What is my job? My job is to make sure you understand things and pass the exam. This is my job. But what is your expectation? Your expectation is, apart from that, I will make you feel good about yourself and life. You see, there is a gap between what I can do and what you are expecting me to do. This gap between what I can do and what you are expecting me to do is the expectation gap. For example, I can teach you, I can make sure you understand, but can I make your personal, can I interfere in your personal life and give you life gyan? No. If you are expecting that, there's a gap between what I can actually do and what you are expecting from me. And this comes with respect to an auditor. See, auditor's job, I will show you here. Some people incorrectly believe that the auditor provides absolute assurance. That is, audit ho gaya, so it means there is no mistake in the financial statement. No, that is not the case. Auditor can only give you reasonable assurance. Auditor can give you a reasonable amount of confidence, reasonable amount of assurance, and auditor can tell you, okay, look, everything is fine. There are no major mistakes. But if you expect the auditor to give you absolute assurance and tell you, okay, even 1 rupee mistake should not be there, that gap between your expectation and reality is known as expectation gap. So auditor will give only reasonable assurance. Auditor's job is to give reasonable assurance. If people expect absolute assurance, there is a gap. We can only give reasonable assurance, not complete 100% assurance. This gap between the reality and the expectation is known as the expectation gap. Are we all clear on this? Everybody clear? No doubts? Quickly, everyone.
Car's petrol put what?
Just keep yourselves in mute unless you want to speak with me. Okay, now the next thing. So majorly I've completed majority. Again, this is a marathon session. So majority, major stuff I've completed in this chapter, which is what is audit, what is assurance, limited and reasonable assurance, and expectations gap. Now we're going to be looking at some very important chapters. Okay, some very crucial chapters. I'll come back to rules and regulations. I just wanted to start off with the first chapter because I wanted the introduction to be there. What is audit? What is assurance? It's the basics. All right. But the major thing, one of the major chapters that you need to be very good with is procedures. All right. And again, because this is a marathon, I'm talking about how and what are procedures. See, we mentioned that audit is basically investigating. Correct? Now, in order to investigate, you will do some procedures. Right? In order to investigate, you will do some procedures. For example, now this chapter is very important because a lot of people who lose marks from this chapter. Right? And I will explain this to you with the help of an example. I will explain this to you with the help of an analogy. Right? Suppose I tell you that I'm a doctor. Okay. And I tell you that you have to, the procedure I tell you is, suppose I'm a doctor. And you have a vitamin D deficiency. You have a vitamin D deficiency. Now, in order to solve this vitamin D deficiency, I tell you a procedure and I tell you outside every day for 10 minutes. If your doctor tells you this, you will feel a little worried, no? Arey, why should I stand outside for 10 minutes? For what? Here, if you just say stand outside for 10 minutes, it is bad. It's not a good answer. You need to elaborate. I need to elaborate. The good answer will be, I have to say, stand outside every day for 10 minutes to take sunlight from the sun in order to get your vitamin D deficiency, vitamin D dose for the day from the sun. So you see, both are saying the same thing, but when you give your answer in the audit and assurance exam, you need to be able to answer in detail. You understand? I will give you an example from the textbook. One example is, I'll give you an example which you people can understand, okay? And that is, the example would be, suppose you want to check how many likes have you got on your social media. Right? So the bad answer will be, open your social media and check. I don't know how to check. So when you give the procedure answer, you need to explain in detail. You need to say what you're doing, from where are you checking, and why are you checking. For example, you will say, open your social media, open the post from your social media, from your social media. So यहाँ पे what is happening? First thing, you are telling what to do. Open the post. This is what to do. Here, you're telling from where, which is the source. Open the post from your social media to check the likes. So you see, there are two parts to your answer, three parts to your answer, which I've put in three different colors. Pehle, what is to be done? Second, from where should you do it? And third is, why are you doing it? What is the objective behind it? Right? For example, you want to check if certain assets exist. So the bad answer will be, select a sample of assets. See here, check a sample of assets. Check a sample of assets. Okay. The good answer will be, what to do? Select a sample of assets. This is the first part. This is what you will do. What to do? This is what you will do. Select a sample of assets. Pehle, what to do? Second is the source. From where will you take a sample of assets? From the non-current asset register, which is the source. The second thing is, from where? The source. You will select a sample of assets from the asset register. And physically inspect them. You actually see if they are really there. What is the objective? Why are you taking the asset and physically inspecting them? You are selecting the asset from the asset register and physically inspecting them to ensure that those assets exist, to confirm that they are really there, to verify existence. Objective क्या है? Objective is to check that those assets really exist, to confirm that those assets exist. So your answer, you need to ensure, has all the three things. The blue thing, which is what to do, the green thing, which is from where should you check, and the red thing, which is why are you doing it. If now this, I mentioned even in my main class, this looks like a country's map, sorry, a country's flag, but this is what you will do. So what to do? Source, objective, right? I will give you another example. The other example would be to check the valuation of receivables. Right? Again, the good answer will put three things. What to do? Inspect post year-end bank statements. Right? Post year-end bank statements you are checking to identify if payment has been received post year-end. If so, agree the amount to the trade receivables account at the year-end. So you are checking what to do. From where will you check? Agree the amount to the trade receivables account. And why are you doing it? To identify if payment has been received. So what to do? From where to check? And how to do. For example, I'll give you an analogy. Okay, one small analogy is you are learning cooking. Now, if I am teaching you the procedure of cooking, I'll not just say, go to the kitchen and start making mashed potato. This is a very bad procedure. This is a very bad explanation of procedure. This is a bad answer. What is a good answer? Go to the kitchen, take the mashed potatoes from the fridge and cut it to small pieces. I don't know how to make this. So apologies if I'm not giving you the correct procedures to make the mashed potato. Cut it into small pieces and let it boil to ensure that it becomes soft and edible. So obviously the second one is a better explanation of the procedure, right? So keep this in mind. Whenever you give your answers for procedures, this is how you will explain and elaborate. Okay. So far, what have we looked at? We have looked at what is audit, what is assurance, limited and reasonable assurance, expectation gap, and how to write a good answer for procedures. Now I will actually do some procedures. Okay. And let's do procedures for non-current assets, because if I do non-current assets, inventory to a great extent will be very similar. Let's go to non-current assets. Now, let me tell you one thing, guys. I will explain this to you, assuming no prior knowledge. These are your financial statements. In the financial statements, the company or your client, you are the auditor, you are the detective, you are the investigator, you are the auditor. Your client has made a claim that there are non-current assets worth 50,000 or 50 lakh. Now, your job is to do some procedures to investigate if this actually exists. Do we really have assets worth 50 lakh? Are they really there? You need to do procedures to check if those assets are there. So you need to see if these assets which your client has mentioned. Now see, the client can lie. This is the client, and the client can lie. See this, I'm putting horns on the client. He can lie. The client can lie. You are the investigator, you are the detective. So you have to do some procedures to really confirm and check whether those non-current assets are there. You understand? Right? So where will you get evidence from about the non-current assets? Think about it. Any detective, any investigator, any inspector, he wants evidence. He wants evidence that these 50 lakhs are there. We have assets worth 50 lakhs. He wants what? He wants evidence. Where will he get evidence from? One place. Okay, Subrana, I appreciate your answer, but I will explain this further with another analogy. Okay, there are two boys, boys 1 and boy 2. Boy 1 says, my father has a BMW. Now suppose you are boy 2. Imagine they are small kids. What will boy 2 ask? Boy 2 will say, show me, where is your BMW? So he will actually try to, how will he get evidence? By physically seeing if the car is there in their hand. He will say, okay, I will come to your house and see. That is physical verification. So one source of evidence is physical assets. Assets will physically be there. If we have it, it has to be. Second thing which a lot of children do is, if a boy 1 says, my father has a BMW, boy 2 will say, is your name written on it? You know, children do this, no? If I say that is my table, he will ask, is your name written on this chair? But you will actually do that. You will do the adult version of that. One source of evidence is to check for ownership deeds, ownership documents, papers. If I have assets worth 50 lakhs, kahi to it will be written, right? It will be mentioned somewhere. I will have some papers. So the second source of evidence is ownership documents like title deeds, registration documents, and papers. That also is a source of evidence. Ownership documents. The third thing the boy 2 will do is, boy 2 will say, okay, if you bought it, show me the bill. Now kids will do this generally. Show me, where is your bill? You bought it, no, where is the bill? That adult version of that you will do now in audit and assurance. If your client says that they have assets worth 50 lakh, I am sure that they would have got some purchase invoice. So you will check purchase invoices and sales invoices. Purchase invoices for getting assets, sales invoices for selling assets. So another source of evidence is invoices. Okay. Another source of evidence, boy 2 will say, oh, you have this car. Now, generally, boy 2 might not go that far, but he will say, okay, if your father owns this, show me the bank payment. Show me that you bought this car. See, if you have bought assets worth 50 lakh, you would have paid it from your bank, correct? So it will reflect in the bank statement. So one way for the auditor to check, one source of evidence for the auditor is the bank statement and the bank ledger account. These are all sources of evidence for you as the auditor to confirm non-current assets. Okay? So I hope sources of evidence is easy and clear. Now we will actually get to doing some procedures. Now, again, this is a marathon, so I'm going to do things fast, right? But I'm going to do procedures for non-current assets now with the help of an analogy or an example. Okay. And it's I gave this example in the main class. Suppose I am going on a vacation. Now let's pack my bag, guys. I'm going to Dubai tomorrow. So let's pack my suitcase. This is my suitcase, and this is my list of things which I'm taking to Dubai. Right? So on the list, there is expensive sunglasses. It's 200, not 200, 2,000, 20,000 rupees. So in order to audit this, what I will do is, I will look at the list of items I am taking to Dubai, and I will actually go and check if it is actually there in the suitcase. That is the first procedure I will do. I will obtain the list of the assets that are in my suitcase, and I will check if it actually exists in the suitcase. And that is the first procedure that you can do. So I'm quickly going to the answer because again, I don't want to read the textbook and all that, because this is a marathon. And here the idea is to explain concepts to you fast. But the first thing you will do is select a sample of assets from the register and actually physically inspect them to confirm that those assets exist. And that is what I have explained here. Here, when I'm writing the answer, remember the answer must have 3 parts. Pehla part, first part is what to do. Select a sample of assets select a sample of assets. That is the first thing you will do. Second is the source. From where will you select? From the non-current asset register. That is the second point of the answer. The third point is, why are you doing this? To confirm existence. Only and only if you put all the 3 points, you will get full marks. Because believe me, audit and assurance is a very easy paper. The reason people fail is not because they don't understand the concept, but because they don't know how to frame the answer. So if you say, look at a sample of assets and check if they physically exist, you'll not get full marks. You have to say, look at a sample of assets from the asset register and check them physically if they are really there in the suitcase. For what? To confirm existence. Okay, anyway, close the text. The third procedure I will do is, again, I will use my drawing. Here, I have my shoes, my boots. As an auditor, as a detective, as an inspector, you also have to check a sample of assets that you see in my suitcase. So you see, there's a boots in my suitcase. There are red color boots. I got it from Chennai. It's there in my suitcase. But as an investigator, as an auditor, you have to check if that boots are also entered in the asset register. So it is the opposite of the first procedure. First procedure में क्या करा हमने? We saw the asset register and we saw if whatever is there in the register is actually existing in the suitcase. In the second procedure, we are doing the opposite. We are taking a sample of assets that exist in the suitcase and we are checking if those assets have been entered in the list which I'm taking to Dubai. And you see, in my list, there is sunglasses, there is watch, there are clothes, there are all these things, but boots is missing, which means that my list is not complete. So what am I doing? I'm selecting a sample of assets that are physically there in the suitcase, and I'm checking if they have been entered in the asset register to ensure that the register is complete. You see, there is a problem here. This list is incomplete because I have not entered my boots. And that is the second procedure you will do. You see here, look at the textbook. Select a sample of assets that are visible at Murray's premises, that are actually there in the premises. But you need to inspect. Part number 2, it's there in the premises, but you will also inspect if they are entered in the register. Why are you checking this? To ensure that this register is complete. So you see there are three parts to this answer as well. So all your procedures answers have to look like a country's flag. There have to be three parts to it. All right. Now let's look at the third procedure. Now, the third procedure is this. I'm just moving back a bit. Dekho, in my list, I say that I have sunglasses worth 20,000. But as a detective, as an auditor, I need to really check if it is worth so much. So one procedure is inspect a sample of assets in the suitcase. Inspect a sample of assets at the client's premises in the client's warehouse, where you will check the physical condition of the asset. Inspect a sample of assets at the client's premises where you will inspect a sample of the assets at the client's premises, where you will check for usage and quality. Why are you checking for usage and quality? Suppose you check my sunglasses. And you know, this is broken. You see this? I'm drawing a line. This part is broken. Do you think the valuation that I have put for the sunglasses is correct? If the sunglasses are broken, do you think the sunglasses will be worth 20,000? What do you say? If the sunglasses are broken, do you think the sunglasses will be worth 20,000? No, exactly. So you inspect a sample of assets at the client's premises where you will check for usage and quality in order to check if any of those assets are impaired or damaged, as this will check for valuation. If it is impaired and damaged, this valuation of 20,000 will be wrong. So this is the third procedure that you can do. Again, you will get full marks for this point because you've told what to do. Inspect a sample of assets for usage and quality. This is the first thing you're doing. From where? From at the client's premises. So you've told the first part, inspect a sample of assets for usage and quality. So you've told the first part. Where? At the client's premises. For what? What is the objective? You want to see if those assets are impaired in order to confirm valuation. You understand? So this answer, because it's broken into three parts, will give you full marks. Okay, so that is the third procedure. So procedure number one was what? Select a sample of assets from the asset register and check if those assets, and physically check those assets to confirm that they exist. So again, this answer is also broken into three parts. First, what to do? Select a sample of assets. From where? From the asset register. And physically check those assets at the client's premises to confirm that they exist. So this answer will give you full marks as well. Second answer is the opposite. The assets that are physically there, like these boots. Select a sample of assets that are physically there in the client's premises. And see if they have been entered in the asset register to confirm if the register is complete. So you see, again, this answer is broken into three types. Select a sample of assets where the assets that are physically at the client's premises. Why? To see if they have been entered, to see if they have been entered in the register to confirm that the register is complete. So you see, this is how you will give good answers for procedures. I hope this is clear and easy, guys, and it is easy for you to catch. All right. Another thing you can do is, as I said, you can look at ownership documents, invoices, papers to confirm that the client owns it. See, maybe, it's written in the see, in the financial statements, it is written that I have expensive sunglasses worth 20,000. But there is a possibility that the sunglasses are there in my suitcase. But maybe I stole those sunglasses. Or maybe those sunglasses belong to my aunt. Or maybe I have to return those sunglasses to somebody. You understand? So one very important procedure that you have to do is you have to check that yes, the asset is there in the register. It is there in the warehouse, but do we have the papers for the assets that will prove that our client owns those assets? You understand? So for a sample of assets, because remember, the auditor only gives reasonable assurance. Very good, Subrata. Yes. For a sample of assets that are in the asset register, we want to see if we have invoices, deeds, registration documents to ensure that those assets are actually belonging to our client, which will confirm that my client has all the rights over those assets. It confirms rights and obligations. So again, think about it. For a sample of assets that are included in the asset register, we check if we have papers, documents at the client hands to confirm that those assets actually belong to the client, to confirm rights and obligations. Yes, Mariam, that will definitely get you more marks. That is what will get you full marks. So you must explain which assertion does it check. So here it checks rights and obligations. That is what will get you full marks. Otherwise, even though you are giving the right answer, you will lose out on marks. That is why people don't score very well in audit and assurance because they don't know how to frame the answer. Are you understanding? So these are some ways of how you will do procedures for non-current assets, right? For example, there is disposals. Now, one area, now again, because this is a marathon, I want to mention this here. When somebody asks you procedures, give procedures for non-current assets, they start listing down a comprehensive list of all the procedures. Please do not do this. The examiner does not want to know if you have by-hearted the textbook. The examiner wants to assess whether you have truly understood how to do auditing. For example, if the client hasn't made any disposal, according to the question, the question in the exam, if the client has not done any disposal, and then you write procedures for disposals, first of all, you are wasting your time. And secondly, you are disappointing the examiner. Why are you disappointing the examiner? Because your client, in the answer, in the question, in the exam, your client hasn't even made any disposal. So when you write procedures for disposals, it immediately gives a message to your examiner that you have not understood. You have just mugged up and you are copying it in the exam. That is one very important reason why people fail audit and assurance paper. Right? So please don't put generic answers. Your answer has to be relevant specifically for the client. Do you understand? For example, if your client has some of its assets at a third party's warehouse, you can rather put a procedure for that and say, inspect the assets the client, for a sample of assets mentioned in the asset register, that are at a third party, inspect those assets at the third party and check for condition. Check if they exist. This you can put, provided your client has its asset at the third party. Otherwise, if you put that, you are clearly telling your examiner that you don't know how to do audit. You don't know how to give your answer, which is wrong. Okay, so I hope so far so good. I hope everybody is clear. Yes, so you will have to give multiple procedures for one assertion. For example, here, what are you doing? Select a sample of assets from the register and physically check if they really exist. That is one procedure to confirm existence. Second procedure for existence would be, if you have made any new purchases, if there are additions to your non-current assets, take a sample of additions and check if the description on the invoice is related to that asset, to confirm that it is actually that asset. You actually really have that asset in your warehouse. Existence. Okay. So you will have to do procedures in a way that kind of, how do I put it? It should, your procedures, the way you put your procedures has to be specifically oriented towards your client in the exam. If it is vague, you will not get your marks. And if it is not a good procedure, you will not get your marks. I hope that's clear. Okay. Now, look at non-current assets. And similarly, you can also do procedures for inventory. A lot of procedures for non-current assets. A lot of procedures are similar for inventory. For example, here. What did I say? Take a sample of assets from the register and physically check those assets at the client's premises to confirm that they exist. That same procedure you can do for inventory. Take a sample of items from the inventory. I'm just changing the words. Take a sample of items from the inventory count sheet. I'm just changing the words a little bit. From the inventory count sheet, and physically inspect those assets at the client's warehouse to confirm existence. Literally the same procedure. So procedures for non-current assets and a lot of procedures for inventory are very similar. You understand? And the opposite of that is also what I did. For a sample of inventory that is there in the warehouse, check if it has been entered in the inventory timesheet to confirm that it is complete. So I'm just changing a few words. Instead of saying for a sample of assets, you can say for a sample of items of inventory that are physically there in the warehouse. And see if they have been entered in the inventory count sheet. To confirm if the register is, if the count sheet is complete. So you see, you're literally doing the same procedure for the inventory. So again, if you understand the logic, you have literally done non-current assets and inventory together. Same procedure you can do again for inventory. Valuation. Inspect the inventory and see if there is any damage to confirm if, again, it is obsolete inventory. Obsolete means wasted inventory. To confirm valuation, literally the same procedure. So if you have learned and understood the topic well, then your life is very easy. Right? Similarly, obligations, quite literally. Right? You will check inspect purchase invoices for the name of the client. Rights and obligations. That's exactly what I told here for assets. See, if you have inventory, you will definitely have purchase invoice that will confirm rights and obligations. Right? So as much as I would love to go in more detail and elaborate other procedures, because of the shortage of time, here I'm giving you briefs on how you can make your life easy and how to frame your answer in a way that it's not. Or certain things you need to keep in mind in order to ensure that you get very good scores. All right. We have completed about an hour and a half of the session, and I hope, generally I try my best that even if we are taking the class for 4 hours, I try my best to give examples in a way that you don't feel like you are sitting for 4 hours. You don't feel like 1.5 hours is over. We started at 4 and already 1.5 hours is over. I didn't feel it. I don't know about you. I was enjoying it. Not sure about you. But given that this is a 4-hour marathon, 4 hours, I feel 1.5 hours you have your attention span, and after that you might start losing it. So I'll give you a small break, like a quick 10-minute break. Don't leave the meeting. Stay in the meeting. You can just be muted. And exactly in 10 minutes, I will continue. All right? Just stay in the meeting. I'm pausing the recording. And I'm putting myself on mute and stopping the screen sharing. In exactly 10 minutes, we will continue. Don't worry about it. Let's continue. Let's move ahead. We had looked at what? We had looked at a few topics. What is audit? What is assurance? Limited and reasonable assurance, expectations gap, how to write a good answer for procedures, non-current assets, procedures for that, inventory procedures for that. Now, you're going to go back and we're talking about things like again, guys, I will do a full question tomorrow where I'm doing like literally the full question. But again, here, the idea is conceptually to ensure that you are understanding things and you have basic tips. Basic tips. Now, let's look at revenue and purchases. And if you know revenue, then purchases becomes very easy because it's just, again, if you understand the concept, a lot of it becomes easy. You just need to know how to word things. Revenue is what? Revenue is the sale, correct? And in the financial statements, on the financial statements, your client says that I have, in which financial statement will the revenue be in? If you've done FR, you should know this. It will be in the statement of profit or loss. So suppose your client says, I have a revenue of 1 crore. As the auditor, your job is to investigate and see if this amount is true and fair. It needs to be true. It needs to be fair. Right? What is the source of evidence for this? How will you know that there is really a revenue? One thing you can look at is, okay, if you have a revenue of 1 crore, you will have definitely raised some sales invoices. For example, if all of you join Finchartered Academy, we will have a revenue, but we would have given you some invoice. That sales invoice itself is an evidence, is a source of evidence. Similarly, if, for example, I have recorded a revenue of 1 CR, 1 crore, right? It will surely be reflected in the contract that I have with my customer. What I mean by this is probably not for Finchartered Academy, not for with if you people join us, we don't have any contract. But say I'm talking about making a shopping mall. There will surely be a contract which says, "Ke chalo bhai, I'm making this mall for you. And in exchange for this mall, you will pay me this 1 crore rupees over a span of this much period of time." So even looking at the contract with the customer itself is a source of evidence. Similarly, you also have what? You also have, when you sell, you give a note to your customer in which it mentions all the items that are there, which is known as a goods dispatch note. A goods dispatch note is also proof that there was revenue, there was sale. Fourth source of evidence would be the sales day book, the book in which all the daily sales are recorded. I can look at that book to get proof that there is a revenue of 1 CR. Sales day book. Another proof of revenue is maybe sales orders. For example, Finchartered has a revenue of 1 crore. What is the proof of that? Look at how many students are reaching out to us. I get like at least minimum 10 messages every day saying that they want to join us. So that itself is an evidence, right? So sales orders are also a source of evidence. And normally any other faculty, they will now go to the procedures of revenue. But I want to take a minute to kind of bring to your notice that if you have done revenue, if you have understood revenue, you have automatically also done purchases. What is purchases? This is the amount of money that you spent. And the source of evidence is just the opposite as sales. In sales, the source of evidence is sales revenue. In purchase, the source of evidence is purchase revenue. In sales, the source of evidence is contract with customer. In purchase, the source of evidence is contract with supplier. In sales, the source of evidence is goods dispatch note. In purchases, you receive goods. So the source of evidence is goods received notes. In sales, the source of evidence will be, everything will be mentioned in the sales day. In purchases, the source of evidence is purchase day. In sales, the source of evidence is sales orders. In purchases, the source of evidence will be purchase orders. So your life is so simple. With revenue, we've also done purchases. And again, the procedures also will be very similar. Procedures also will be very, very similar. What do I mean by procedures will be very similar? For example, in sales, what do I mean? One procedure is, see, remember, as an auditor, you are an investigator or a detective. One thing you are investigating is, suppose, for example, I have Ananya in this call. Suppose I have what? I have a branch of Burger King. So Ananya comes to me and she places an order. And she says, one chicken burger. Again, with all due respect to vegetarian people, chicken or cheeseburger. She places one order. Okay, fine. We've got the sales order. Order aaya, yes. We got the order. But was this order completed? Maybe Ananya placed the order, but we never completed the order. Maybe I forgot Ananya. Maybe I was taking so much time that I never gave anything to Ananya. So I want to see order to hai. The sales order is there. I want to see if these orders, there are also corresponding dispatch notes and sales invoices for these orders. Because maybe I gave one chicken or cheeseburger to Ananya, but I never made a sales invoice for that, which is a big blunder. And if I didn't make a sales invoice for that, it means my revenue is understated or my revenue is incomplete. I have not added Ananya's chicken cheeseburger order. So I'm going in order. I am seeing if the sales invoice is there, and for the sample of sales orders, I need to ensure that there is also a goods dispatch note and also sales invoices have been generated and ensured that these sales invoices have been included in the sales listing to ensure that sales figure is complete. And that brings me to the first procedure of sales. Take a sample of customers' orders and agree that we have corresponding dispatch notes and sales invoices, and that these are included through inclusion in the sales listing to ensure that all our sales are complete. Only then my revenue is true and fair. Otherwise, it is understated. If my revenue is not complete, it is understated. You understand? Similarly, another procedure which we will do is, so again, remember the way you answer is very important. Select a sample of customer orders. This is what you will. From where will you check it? And check and agree these to the dispatch notes and sales invoices. So the first part of the answer is to select a sample of customer orders. This is what you will do. From where will you compare it? With what will you compare it? You will compare it with the dispatch note and sales invoices. Why? To confirm completeness. You understand? Similarly, whenever there is a sale, okay, now that we've looked at sales, let's look at purchase. Exactly the same procedure that I did in sales, the exact same procedure I'm doing in purchase. For a sample of purchase orders, agree that we have relevant or corresponding goods received note and purchase invoices through to inclusion in detailed purchase listing to ensure that all our purchases are complete. So you don't even need to learn it 2 times. It's common sense. If sales may, we will check this. We will check the opposite in purchases. So I'm literally doing 2 things for you at once. Right? going back to sales, whenever there are numbers involved, whenever there is a transaction involved, we will do recalculations because there is a danger that our calculations were wrong. So whenever a transaction is involved, we do recalculations. This is a procedure that you can always remember. Buy something, you sell something. Whenever you have to calculate something, one procedure to do is recalculate it. For example, if I have to give you an analogy, I count 50,000 rupees and give you cash. All right. What will you do as a procedure? You will count it again. You will recalculate to ensure that there is accuracy. I have given you the correct amount, and that's exactly what you will do here. In sales, many times, especially when you are selling, you might be giving a discount to your customer. And also you will apply taxes. So you might want to recalculate. Remember, whenever there's a transaction or whenever there's taxes involved or there is, discounts involved or there's depreciation involved, you recalculate discounts. From where? From or on a sample of invoices. So remember, please don't answer like this. Recalculate discounts to confirm accuracy. If you answer this, you will not get full marks because you have only given two parts to the answer: recalculate and confirming accuracy. You did not say from where. So you will say recalculate discounts and okay, sales tax applied from a sample of sales invoices or on a sample of sales invoices. Again, if you stop the answer here, you will not get full marks. You need to say to confirm accuracy of calculations. In that, you look at purchases. The same procedure is repeated. Recalculate discounts and sales tax applied for a sample of purchase invoices. Right? Moving back up on the top. See, whenever we make a sale, we need to make sure that the sale is recorded in the correct period. What I mean by that is, if a baby is born, at midnight, you need to make sure that you set his date of birth correctly. Yes, Subarana. That's right. You need to record this transaction, now this event in this case, you need to record it in the right period, which is cut off. If he is born tonight, you have to
6 o'clock.
Record his date of birth. He has to be recorded at 17th of May. But if he is born at 1 a.m. tonight, then you need to record him at 18th May. So similarly, when there is a sale, we need to make sure that we are clear that this sale is for which period. So inspect a sample of goods dispatch note and ensure that these have been recorded in the correct period to confirm cutoff. Inspect a sample of goods dispatch notes before and after the year end and ensure that they have been recorded in the detailed sales list listing in the correct period. So it has to be recorded in the right period to confirm cut off. Are you all understanding? I hope so, because you're all people who have already done audit and assurance. So I hope this is kind of helping you understand better. Can you all agree or disagree? Are you all understanding better audit and assurance? These procedures logically? Yes, your concept is becoming stronger. Now, exactly that's what you will do with purchases as well. Inspect here in purchases, you don't dispatch, you receive items. So inspect goods received note before and after the year end and ensure they have been recorded in the right period to ensure cutoff. I'm not even writing this. Right? So these are some procedures you will do for sales, which is revenue, and for purchases and expenses. Now, what do you have to look at here? See, when it comes to numbers, right? Forget numbers. Okay, I don't want to bore you because I'm sure you are already bored. Our income and very good Iomide Balogun. Income and revenue procedures, there will be a lot of similarities. Sorry, wait, income, not income and revenue. It's this, we're talking about revenue and receivables. We will have a lot of similarities. Even in receivables, you will check sales invoices. Right? Anyway, before I move on to that, see, suppose you have food. Forget audit and assurance, okay? One procedure you will do to check if any insect has fallen in your food. So what will you do? You will use a spoon, check if insect is fallen. You will look carefully, etc., etc. Correct? Now, what we have is this. What we have is this. Apart from these detailed, substantive procedures, you will also do some other procedures where you will compare today's food with yesterday's food and see if there are any major differences in the taste. Because if there is a major difference in the taste, it means something is fishy. Because obviously, if it's yesterday's, I don't know, I just said fishy, so I remembered fish. But if it's yesterday's fish and it's today's fish, the taste should not be very different unless the fish today is damaged or spoiled. So what are those procedures called, guys, where you simply compare today's numbers with a previous period's numbers in order to assess any major fluctuation? Because if there is a major fluctuation, then that indicates a problem. What are those procedures called? those procedures where you will compare today's numbers with yesterday's numbers in order to assess if there's a major difference. Because if there is a difference, very good, guys. These are called analytical procedures. What are analytical procedures? For those of you who don't know, for those of you who are not listening when the teacher was shouting on top of his or her voice and explaining, because we have that habit, right? The teacher is talking loudly, explaining 4, 5 examples, 2, 3 analogies, 2, 3 stories, and then we're not listening. So for those of you, no problem. What is an analytical procedure is, yes, comparison. See, one kind of procedure is to do all these procedures. All of these procedures, which are in detail, substantive procedures. But the other type of procedures where you compare today's numbers with yesterday's numbers. For example, one substantive procedure is in my client's financial statements, or forget client. Okay, I have a student Raj. One procedure I will do is correct his mark sheet, correct his answer sheet. So he has written all this. One procedure I have to do as a faculty member is to correct his answer sheet. So there he has made one mistake here. I have to correct it. He has made one that is one procedure. But totally, Raj has got 10 out of 10. Okay, forget. Okay, he's made 2 mistakes, right? So totally, Raj has scored 8 out of 10. Right? But yes, I did the substantive procedures. Yes, I checked his answer sheet. But one other procedure I have to do as an investigator, as a faculty, as a detective, one other procedure I have to do is look at his marks. Raj got 8 out of 10. This is something fishy because Raj normally gets 0 out of 10. Even yesterday, he got 0 out of 10. Yesterday's his answer sheet. This was yesterday's answer sheet. Even yesterday, he only wrote 2 lines and he got that also. It was everything was wrong. So I striked it off and I gave him 0 out of 10. Today, he has got an 8 out of 10. This itself indicates what? There's a major fluctuation. This could indicate some fraud or error. So I have to investigate further. Who did Raj sit with? Maybe did Raj sit with the topper? Did Raj have any chits in his bag or in his hand? So analytical procedure is basically comparisons. You compare this period to a previous period and assess if there are any major fluctuations. Because there should not be major fluctuations. If there are major fluctuations, that is a cause of concern which we need to further investigate. It means that there could be something either fraudulent or there could be an error. And remember, as an auditor, you are an inspector. So when it comes to revenue, you will compare this year's revenue with last year's revenue to see if there are any major fluctuations. You will similarly compare the revenue of the actual revenue with the budgeted revenue. Because think about it, if the actual revenue was 10 lakhs, but the budget was only 2 lakhs, it means there's a major fluctuation. How is this possible? either my client made a mistake or there is some fraud happening. Again, calculate the gross profit margin and compare to prior year and investigate any major fluctuation. See, little fluctuation is common sense. Okay, yesterday Raj got 7 out of 10. Today he got 8 out of 10. Makes sense. But yesterday our profit was only 2 lakhs. This year the profit is 40 lakhs. This indicates that maybe the revenue is overstated. So these are some analytical procedures, and similarly, you will do analytical procedures for purchases as well. There is absolutely no problem here. So I hope you people are getting the gist of the procedures chapter. Right? Are you all happy with what I've done so far? Look at the 9 topics that I've done. See this? Are you all clear? All of you type. Perfect. Now, let us brief you on. So this is how procedures is done. This is how we look at procedures. Now, what we are going to look at is I'm going to brief you on chapter 9. Now, remember, guys, procedures was one of the chapters that I'm sure you've done AA. I'm sure you've done audit and assurance fully. You've attended the classes somewhere or the other, or you've done self-study. How many of you have done self-study for audit and assurance? How many did self-study? Nobody. How many of you learned from some or the other institute? Guys, how many of you have studied AA, self-study, institute? Well, I just want to understand the background. Oh, okay. Sorry, I wasn't. Subrana. Okay. Learned with lecturer. Okay. Manan, you should be confident because you've learned with me. Samsung did self-study. Okay. Anyway, now I'm going to explain to you external audit versus internal audit. I've told you what is audit in the beginning of this masterclass. Now I'm going to explain to you external audit and internal audit. Harshita also institute. Yumi is self-study. External, internal. See, what we're looking at is this. There is a company. The company prepares financial statements. And the users of the financial statements are who? The users are shareholders. The users are, or basically all the stakeholders are interested in the financial statements. But before we go through the financial statements and before we rely on the financial statements, what do? We hire an outsider who comes from outside the company, and he is a detective, he is an inspector. As I've done, he's coming from outside the company and he is coming to audit the financial statements. What do I mean by audit the financial statements? He is coming to examine, investigate the financial statements. He audits or examines or checks the financial statements. Again, he is not part of the company. He is an outsider, or rather, this auditor is an outsider or he's external to the company. He's an outside investigator. Just like after your board exams, the paper is corrected not by your teacher, it is corrected by the CBSE, outside faculties. So same way, these financial statements are not audited and checked by the company staff. These financial statements are checked by the outside or external examiner. This external examiner, as we saw in the previous chapter, will do some procedures. We saw in the previous chapter. He will do some procedures to check these financial statements. And once he has checked the financial statements, he will give his opinion to the users, which is he gives his assurance through a written report. He gives his opinion. This is one type of audit you can do, where you will go to various companies and you will check their financial statements. You are not working for the company. You are not an employee of the company. You are not a staff of the company. No, you are an external examiner, external investigator who will examine the financial statements. You will do procedures. And after full examination of the financial statements, you give your opinion to the shareholders via a report. This type of auditing is known as I have highlighted, external auditing. However, that is not the only type of audit that you can do. Audit, you also have a different kind of audit where you can actually be the auditor and work inside a company. Here, you are the investigator or detective for the company, and you are an employee of the company. Where if there is any fraud that has happened, you will be called to investigate it. If, again, as I said, if there is any fraud that has happened and you need to investigate, you are the corporate detective. So you can playfully, again, it's not official, but playfully call yourself the corporate detective. You will be asked to investigate the fraud. Similarly, within the company, if there are any inefficiencies, if there are any deficiencies in the systems of the company, you will check those systems. There is a deficiency in the system one. There are various systems in the company, right? There'll be the sales system, there'll be the purchases system. Maybe in system 1, there is a deficiency, there is a weakness. Your job as the investigator, because see, if there is a deficiency, if there is a weakness, the chance of fraud and error goes up. So your job as an internal auditor is to look at the deficiency and give a recommendation to the management about how to fix that deficiency. So an external auditor is not an employee of the company. An external auditor, just look at my underlinings, he is independent of the company. But an internal auditor, as I mentioned, is an employee most of the time of the company. External auditor will be checking the financial statements and giving his opinion whether the financial statements are true and fair. He will be doing his own procedures for that. So the objective of the external auditor is to express an opinion on the financial statements in the form of a report. But the internal auditor does not audit the financial statements. The internal auditor will be talking about internal controls, internal systems, and seeing if they are working fine and giving suggestions to the management. So improve the company's operations by improving the systems, by improving the controls. If the controls are weak, he will be giving suggestions as to how to strengthen them. If there is a fraud that has happened in the company, he will be the first person to go and investigate. So I repeat, the external auditor, as we saw in the previous chapter, will be doing some procedures and he will be examining the financial statements and he will be giving his opinion on the financial statements, whether they are true and fair. He is not an employee of the company. But the internal auditor is most of the time an employee of the company. And his job is to check, investigate fraud and error within the company and give recommendations about how to improvise on the systems and controls. Right? As I mentioned, the external auditor checks if the financial statements are true and fair. The internal auditor's job is part of the company. He is an employee of the company, and his job could be fraud investigation. His job can be giving recommendations for weak controls. So his scope depends on the management's requirement, as he is an employee of the company most of the time. Now again, the external auditor is an outside examiner and he is not appointed by the company directors. He is directly appointed by the shareholders. Versus an internal auditor, most of the time he is an employee of the company and therefore is hired or appointed by the directors of the company itself. Now tell me guys, which are you more interested in? Do you see yourself doing external auditing in the future after your audit and assurance exam? Or do you see yourself doing internal auditing? Which one excites you more? I have a lot of answers. Akhil is external. Cables is external. Subarana is external. Victoria is none. Okay. So maybe you want to do AFM. Maybe you want to do APM. Iomide is external, Xiomi is external. All of you want to do external. Nobody wants to do internal. Mariam says internal audit looks more complex. Okay. So I see a lot of you are going and taking. Okay, Iomide feels internal seems boring and repetitive. Maybe not. I think just give me some time. I will talk about internal auditing in more detail and maybe you will like it. But from what I am able to see, except for Victoria, maybe a lot of you will choose AAA in your professional levels. Is that the case or am I wrong? How many of you have decided, okay, yes, audit is nice, I will take AAA? Meanwhile, I'm going to put this here. Subarana has not decided. Geo has decided to take AAA. Guys, whichever paper is you are doing, make sure you enjoy it. Again, AA, it is entirely theory. A lot of people don't enjoy AA, but I've tried my best that, at least so far, because this is a marathon session and I haven't done the paper for you, AA. I'm trying my best that you are able to catch it. You are able to go ahead and do it. I mean, you are enjoying the class, I hope. Okay, let us move on. Let us move ahead to what the internal auditor does. Value for money. What is value for money? I will explain value for money. Value for money generally is 3 E's we look at. And value for money, although it's very easy, I'm still doing it because of its repetitiveness. I remember seeing value for money in PM. I remember seeing value for money in FM. I've seen value for money in audit and assurance. Maybe it is also there in one of the skill level, knowledge level papers. So, although value for money is easy, I'm still briefing you on it because of how often it is seen in the various exams, including the money. What do I mean by value for money? I've stopped sharing my screen. I gave this example in the regular class. Manan must be recollecting this. Ashmeet, if you are here, some of my regulars. Okay, none of my regulars are here. Okay, Manan is here. But this is like a repeat for you. I'm sure all of you have seen this medicine. Now, if you don't know Panadol, I'm sure in India, it goes most of the time by the name Dolo. Okay. Dolo, Panadol, whatever you want to call it. It is a paracetamol. Now, when will you say that this medicine was effective? When will you say it is effective? When your headache is gone, correct? When will you say it is efficient? Very good, Mariam, you're right. Meeting the goals. Effective means, is it meeting the objective? When will you say it is efficient? Array, I ate only half a tablet and my headache went. Efficient is when the input is less, but the output that you are getting is a lot. Input efficiency sees input versus output. If input is less, but output is more, you say it is efficient. What do I mean by this? I had only half the tablet, but my headache is gone. Versus economical. Economical is when you get it at the best price. Not necessarily the cheapest price, but the best price. Obtain it at the minimum cost, best cost. Now let us use my example. As a faculty, when do you think I am effective? When am I effective? When am I effective? Tell me, you can be honest. I am effective when all students understand. Very good, Subra. When will you say I am efficient? I can complete the entire syllabus in lesser hours. For example, yesterday we mentioned we completed the syllabus yesterday, and I'm very proud to say that we've completed the entire audit and assurance batch in just 55 hours, where normally about 60 hours of classroom training happens. And if you ask Manan will, I hope, say that everything I've gone in details. I've explained everything with all analogies and examples. In spite of giving so many examples and analogies, I will analogies compared to elsewhere. This is where I am efficient. My input is less. I put less hours, but my output was high. Are you understanding? So that is what I mean by efficient. And when am I economical? When I give you the best cost. Now, as an internal auditor, you are an examiner for the company. You are part of the company, and your job is to assess value for money. You have to see if your company, what you are doing, your company's services, products are economical, are effective, are efficient. You understand? So you have to be checking that. You have to be auditing that. Are you understanding? That is one of your first jobs as the internal audit. Similarly, the company that you work for will have some controls. For example, in Finchartered Academy, what is a control? A control is basically a measure to either avoid or detect fraud or error. So I've completed what? Value for money. Effectiveness of controls is what? What is a control? a control is a measure in place which the company puts to ensure that we either avoid or detect fraud or error. For example, how can I explain control to you using a simple analogy? Simplest of simple analogies I will use. You drive a car. There is a danger that there could be an error. And there is a danger that because of the error, there is an accident. So in order to, avoid the accident or minimize the effect or impact of the accident, what do you have? You have a seat belt. So a seat belt is a control which is there in a car. It is there in place. It is a measure in place. I will be doing exam kit questions. Yes. What is controls? It is a measure in place. What is a seat belt? It's a measure in place that will, maybe it will not avoid the accident, but it will bring down the impact of the accident. So a seat belt is a control. Airbags are controls. Again, it will not avoid the accident, but it will at least bring down the impact of the accident. You understand? Going slow is a control because it's a measure in place that might avoid an accident. So what is a control? From a company's point of view, companies keep controls as a measure in place that will either avoid fraud or error, or at least detect fraud or error. For example, one control is what? What is this? What does this look like? What does this look like? It's on the top, on the ceiling. Now, sometimes I like to confuse people because sometimes confusion brings attention. Now everybody is worried. What is this? This is a CCTV camera. Okay, Mariam has actually prepared very well. We're talking about master files and all that. And yes, that is a good control where only seniors can access master files. But this is a CCTV camera. A CCTV itself is a control. It won't avoid fraud or error, but yeah, maybe yes, it can avoid fraud or error because when people know that there is a CCTV, they will stop themselves from doing fraud. And we can detect it. Right? Another example of a control is segregation of duties. Say you have Ramu. Ramu collects cash. Ramu counts cash. He puts cash in the locker and he has the locker key. This means what? Nobody except Ramu knows about cash. So it is very easy for Ramu to, I don't know, maybe he'll not do a fraud, but maybe he will do an error and nobody will be there to catch it. Correct? So in order to avoid this, one control I do is segregate duties. Ramu will do collecting cash. But Shamu counts cash. So even if Ramu made a mistake in collecting cash, Shamu will catch it. Mamu will put cash in the locker. So even if Shamu was stealing some cash, Mamu will catch it. Are you understanding? So segregate duties. That itself is a control. So it helps in either preventing or detecting fraud or error. And don't worry, we will look at controls. You have looked at controls in a lot of detail in the systems and controls chapter. But from an internal auditor's point of view, the internal auditor's job is to audit and check if all the controls are effectively working. So your job is go and check the control. Go and see if the CCTV is working. Go and see if there is proper segregation of duties. So the second job of the internal auditor is to check if the controls are effective. The third job of an internal auditor is wherever fraud happens, the internal auditor will be notified. So it's like wherever fraud happens, you will be called and you will go and investigate that fraud. Sometimes the fact that there is an internal auditor will prevent a lot of people from doing fraud. Generally, in countries where the law is very strong, say you talk about Singapore, you talk about Dubai, which is a city in the United Arab Emirates, you talk about countries where the law is very strong, crime will be very less. Because the fact people know that if they do fraud, they will be caught. Similarly, when in a company there is an internal auditor, fraud will be minimized because people will be scared. They will be deterred because they know that if they do fraud, they will be caught. So they will be scared of you. You are the company's detective. And they're all scared of you. So that is the third job of an internal auditor. Fourth job of an internal auditor, again, he is examining things and seeing if we are following all the laws and regulations. So all of these are jobs of the internal auditor. One example of a job of an internal auditor is a mystery shopper. And maybe the ones who said that internal audit looks boring, maybe this will make you a little interested. Iomide said internal audit looks boring. Well, maybe you work for the company which has the franchisee of McDonald's. One of your jobs as the internal audit will be to go in disguise. I mean, not literally you go in disguise, but what I mean is you go to one of the McDonald's outlets as a customer. Are you the customer? No. You are actually the auditor of the company which is running McDonald's. You are the internal auditor. Suppose we are in India, right? So I'm sure it is some company that has taken the franchisee of McDonald's and they are running it. So say you are the internal auditor in that company. So your job, part of your job is to go to McDonald's as the customer. And what will you go and do there? Just like a normal customer, you place the order and eat. This is part of your job. Don't you think it's very fun? And in the process, when you place the order, when you eat, you will observe the systems in the process. So you will not go and tell the guy at the counter and say that, oh, I have come to audit. No, you will silently go, chup chap, you will go to McDonald's outlet. You will place an order as if you are a customer, and don't worry, your company will reimburse it because you are going there as a mystery shopper. You are going there for a job. He will pay you for your burger. You will place the order, but while you are placing the order, you will see if there are proper systems in place. See if the customer service is good or the guy at the counter is misbehaving. See if he is rude. See how is the customer service. See how fast they are giving you the burger. Eat the burger. See if the taste and the quality is up to the mark. If it is not, you will go and report this to the company. You understand? So this is part of your job. So the guy at the counter, he better behave himself with you. Because if he does any misbehavior, or if he is rude to you, or if he is slow with you, he is in trouble. Why is he in trouble? Because he does not know that you are actually the internal auditor of the company. And he doesn't need to know. And that's why the textbook has said that one of the roles of the internal auditor is mystery shopper visits. It's fun, no? I would love to do this every day. Every day I'll go mystery shopper. Similarly, another role as an internal auditor which you might have is, see, as a company, even Finchartered Academy, we sign a lot of contracts on a day-to-day basis. We need somebody to check that contract and see if everything in the contract is fine for us. Is there anything that puts Finchartered Academy at risk? So your job will also be to check, to examine, to audit contracts on behalf of the company and see if the contracts are safeguarding our interests. So as an internal auditor, along with a lot of verifications and examining and checking, you have all of these roles. Okay, so we looked at value for money, we looked at effectiveness of controls, we looked at fraud, we looked at compliance with laws and regulations. We looked at mystery shopper visits and so on. Right? So this is what internal auditor does. So today in this masterclass, or in this marathon as we are calling it, we've seen what is an audit and what is assurance. And along with that, we also saw within audit, we have external audit and we have internal audit. What does the external auditor do? What does the internal auditor do? We saw that. Apart from external auditor, a lot of procedures, he audits financial statements. We saw few procedures, gave general answers also about how you answer for procedures, and always ensure your answer has to be specific to your client. Then we looked at expectations gap in the first chapter and limited and reasonable assurances. And that brings me to the end of the third hour today. So we started at 4. So 4, 5, 6. 3 hours are over and we have 1 more hour. Right? Guys, I generally ask you this in every class. I mean, again, my regular students know this. But now that we're at the end of the third hour, I ask this in every class. Okay. But if you have to rate your understanding, your satisfaction, your engagement level on a scale of 1 to 5, where 1 means you feel like you didn't understand anything. 5 means you felt like, wow, I understood everything. The analogies used were very helpful. My understanding has improved. I understood everything. 0 means it felt like I was teaching in Spanish. So if you have to rate your understanding levels for whatever 3 hours that we have completed on a scale of 1 to 5, how much would it be? These are all the topics we looked at. Don't worry, we'll take a small break and we will go for the 4th hour. But if you have to rate your understanding, how much would it be? Quickly. Akhil, okay, Geo, Cable, Iomide is 4, Nitya is 4, Rose is 4.5. Akhil says 4.5 just because of unstable network, or else it's 5. For the part where the network permitted 4, Manan is 5. Now, normally, in a normal class, like for my students who are normally attending classes with me, when they give their rating out of 4, Manan knows this, my regulars know this, when they give their rating anything below 5, and this is our attempt to ensure that all our students get quality. Normally, how is a class? After class is over, end of the story. But we take this rating every day, and it's not like only time pass we do. We take the rating for time. It's not. Anything less than 5, we ask you why you are less than 5. Now, if you say, oh, my network was bad, or oh, I joined late, or oh, I'm out, so I cannot hear, then obviously, I mean, you watch it again. But from our side, why is it? Where is it that your understanding was weak? Like, obviously, if you've given 4.5, there has to be a reason that, okay, I didn't understand so and so topic. Or, okay, I didn't understand the logic of that. Or, okay, I didn't understand the concept of this topic. Right? So, we can take a small break. Rose feels her device volume was very low. So we'll take a small break, which you can take right now, and we'll connect from 7:05. But I want everybody to let me know why whoever is less than 5, Manan is 5, Akhil is 5. Akhil says that apart from the network, he's 5. So whoever is less than 5, I want to know where is it that you have lost, you haven't understood, or you haven't, what I'm trying to say. Where is it that you've missed that 1 mark? Let me know that, because that will help me to kind of help you there in that aspect. So type it. Meanwhile, we can be on a break, but ensure that you type it so that we're aware where we want to help you, where we need to help you. Okay? You can take your break. To the last hour of this quick marathon that we are having, in which I have explained, I've talked about procedures, I've talked about internal audit, which is chapter 10, which is chapter 9. I've talked about the first chapter. Ayoma had asked a question on when we are asked for multiple procedures on one assertion. I did mention that when we're talking about one assertion, again, I did give an example where you are also using another procedure for the same assertion. So we will, again, mention those procedures also. Okay. Now, anyway, I will move ahead. I will move in. And we're going to now talk about probably the 8th chapter, which is also a very big and important chapter, because again, I'm not doing like those big topics. Sorry, I'm not doing the small topics. I'm doing like the more important topics that are needed for in audit and assurance. Okay. So when I am doing this, I'm talking about controls. Okay. And I have a recording for controls as well, where we talk about deficiencies and giving a recommendation for the deficiency. And again, I will explain this with the help of an analogy. And again, the number audience has gone down. We have only 17 people. We had 25 people when we started, even 30. In fact, when we started, we had like 30 people. So I'm not sure if 4 hours people are able to sit. But let me explain to you deficiencies with the help of an example. I'm not sure what that was. Just give me one second. Yeah. So when we talk about deficiencies, see, we need to talk about having a good answer for deficiencies. And when we talk about a good answer, what I need to say is this. See, my doctor did my blood test. And after doing the blood test, my doctor got to know that I have a vitamin D deficiency. All right. My doctor got to know that I have a vitamin D deficiency. Now, what does the doctor tell me? The doctor tells me, hey, you have a vitamin D deficiency. He tells me this. I'll be like, so what? Who cares? Like medically, he knows what is a vitamin D deficiency. But for me, if you ask me, I don't know what it is. I mean, okay, vitamin D deficiency. I'm still eating, I'm still walking, I'm still drinking, I'm still sleeping, I'm still happy. Everything is okay. Correct. When the doctor explains the deficiency, he will explain the deficiency. He will say you have a vitamin D deficiency. So first he will say, what is the problem? And he will say, if you don't correct this, you will have issues of bone health, immunity, and so on. You understand, right? And then the doctor will give me a recommendation and he will say how to specifically deal with the deficiency. That is, he will tell me, have this effervescent, effervescent tablets. You put it in the water and then that tablet will, bubbles will come and then you will drink that water. I like looking at that. It's very satisfying. So he gives you this, have this effervescent tablet once a week for 1 month. So when you give deficiency, for example, there's a child. If you say, hey, don't run fast, he will run faster. That is the problem with children. If you tell a child, don't run fast, he will run faster. So you have to tell him, you should not run fast. Otherwise, you will fall. He will be like, so what if I fall? So you have to elaborate in detail what will be his consequence. You will fall and you will break your teeth. Similarly, when you speak to your client, you will give a deficiency, and the good way of giving a deficiency, the good answer of a deficiency is you need to clearly specify what will the problem be. There are a few examples. So one answer is saying sales orders are not sequentially numbered. So what? You have to tell. Orders will be difficult to trace, and just compare it with this. You are running fast. That if you say, as I said, child will run faster. So just saying sales orders are not sequentially numbered is not a good answer for giving a deficiency. You will have to say, if you run fast, you will fall. Again, this is not a good answer because he will fall, but what will be the consequence of falling? The good answer will say, if you fall, your teeth will break. Right? So similarly, whenever there is a deficiency, for example, sales orders are not sequentially numbered, that does not communicate to the client what will happen, what is the consequence. You have to say that some of the orders will be difficult to track, and because of that, we may not fulfill a few orders. And if we don't fulfill a few orders, some customers may be dissatisfied and will never come back to you again. Numbered. So orders will be hard to track. Orders may not be fulfilled. If orders are not fulfilled, customers may be disappointed and may never come back to you again. This is a good answer of a deficiency. Are you understanding? So again, ignore the recommendation. Just ignore the recommendation. let's just talk about the deficiency itself. Let's still stay on the deficiency. One deficiency could be that there is a lack of segregation of duties. Now, again, see, again, when it comes to deficiencies, like this example over here, a poor answer will only state what the deficiency is. It will not tell you how will it affect the client. So remember, whenever you give your answer to your client in the exam, your client is the examiner. So he wants to know A to Z from scratch, what is the deficiency and how will it negatively impact the client. And when it comes to giving recommendations, you should say what? Going back to this example. Orders should be sequentially numbered, but you need to explain in detail. How will you know that it is sequentially numbered? Orders should be sequentially numbered and a sequence check should be performed and any breaks in the sequence should be investigated. This is a better recommendation. Good recommendation will say orders should be sequentially numbered. If there is any break, it needs to be investigated and resolved. And again, that way, what happens? You can add and say that way you don't miss out on any on serving and satisfying any client. All right. So when it comes to deficiency is something that is kind of like something missing, something that is not done right. So when you give a recommendation, ensure that your recommendation completes things until the very end. You will not only say what is the deficiency, but you will also say what will happen if you don't correct it and what will be the final consequence on the company if it is not resolved. Now, this reminds me of something that is also of importance, and that is audit risk and business risk. One topic which a lot of people get confused between audit risk and business risk. It's chapter 5. And a lot of people struggle with this. They don't know the difference between audit risk and business risk. Yeah. This is something that people aren't very comfortable with. A lot of people. See, there is a scenario where customers are struggling to pay. Okay, imagine in Finchartered Academy, students are struggling to pay. What is the risk? Again, I'm not getting into, because again, I have, again, Manan and the ones who have been attending my classes know that all this is covered in detail. And you all have studied also. So this is a marathon where we are quickly running through those topics that are of utmost importance and those topics where a lot of mistakes are generally made. And this is one topic where a lot of mistakes are generally made. Customers are struggling to pay us. Now, what is the danger? Can anybody tell me what is the risk? If the customers don't pay, what will happen? So what? Bad debt. If there is bad debt, so loss of revenue, geo. This is like the sad part. This is why I came to this topic, because 2 weeks for the exam. And again, this is one area where people make mistakes. Not even 2 weeks, I think. Ananya, good. Again, Geo, listen very carefully to what I'm saying. See, there are two types of risk, Geo. One is the risk to the business, and the other is the risk to the auditor. So the risk to the business is known as business risk, and the risk to the auditor is known as audit risk. Now, as an auditor, I know it might sound absolutely rude, but as an auditor, I don't care if my client is getting his money. I don't care if my client's customers are paying him. I don't care if my client is stressed. You know, I get such beautiful answers, so sweet answers I get. I get answers like, oh, if the customers don't pay, the senior managers will be very stressed. I actually get answers 2 weeks before the exam. They will lose their, they get into, problems. Company will shut down. I don't even care if my client's company shuts down. Yes, Ananya, you're right. But let me complete this. This is something a lot of people don't understand. I had such a sweet answer to the regular students when I was doing my regular classes. I had one answer which was so sweet. It said managers will run away or suicide. I as an auditor, I only care about the financial statements. That is all I care about. So as an auditor, the only thing I'm worried about the client losing his money? No. Am I worried about the client, no, customer not paying me? No. Am I worried the client is stressed? No. Am I worried if the company shut down? Am I worried if the client run away? No. I am not about this. I am only worried about this problem. Financial statements. That is the only wahid worry I have. The danger, as Ananya mentioned, and when Ananya was, I believe, the only person who answered correctly. But the danger is, if my client's customers are struggling to pay, all of this is business risk. Ayokanmi, are the risks 1, 2, and 4 not going to affect the financial statements? Not directly. I don't care if my client's customers are paying him. I mean, I have nothing to do with his wallet. It's not directly going to affect the financial statements, Ayokandi. How this is going to affect the financial statements is, again, I don't care if they pay my client or not. I am only worried that if they don't pay, right now my client is sitting with receivables. He feels has shared reserves of 20 lakhs, or rather, I don't have space for 2 lakhs. But if the customers don't pay Ayokani, my client not getting the money, I am not worried about it. My only worry is in the financial statements, the receivables might be wrong. So Ayokanmi, your question, is it not going to affect the financial statements? Well, if you give this the answer to the examiner and you say the client, my client will not get the money from the customers, it will definitely affect your marks. You need to say, finally, in the financial statements, what are you worried about? You are worried that the client is expecting 2 lakhs from his customers, but if the customers are not paying, meaning a lot of customers are going to turn into bad debts. Therefore, these receivables we may not get. These receivables may be an over expectation, also known as an overstatement. So if customers are struggling to pay, all of this, Ayokhanli, is a worry for the business. My only worry is the financial statements. In the financial statements, the receivables will be overstated. Alas, that is it. You might ask me, but then how come we don't care if the company shuts down? Why do I care? I don't care if the company shuts down. My only worry is if the company is not going concern. I get such beautiful, sweet, cute answers. I get very good IMI. I get so beautiful answers. Literally 2 weeks before the exam, I get answers like if the company shuts down, the directors, the managers, their source of income will be closed. I don't care. If the company shuts down, I really don't care. My only worry is this going concern must be properly reflected in the financial statements. That's it. So if I have to open the textbook, if the customers are struggling to pay, the business risk, exactly, Ayokhandi, we are only worried about how those problems are going to create a problem in the financial statement. So the business risk is that, oh, the company's profits will go down. But the auditor's risk is if the customers are struggling to pay, the receivables will be overstated. Let me take another example where the client operates in a fast-paced environment or fast-paced industry. For example, FMCG, fast-moving commodities and goods. Okay. Now, if my client or your client, our client, is operating in a fast-moving industry, what do I mean by fast moving industry? Industry where items get spoiled very fast, like food, for example. Tomatoes won't be fresh for a very long time. Mangoes won't be fresh for a very long time. Bananas won't be fresh for a very long time. So what is the risk? Some people say, oh, inventory will get wasted. My client went and bought so much inventory. Look, you are not the client's mother or father. Stop treating your client that way. Because I get answers like that. That's why I'm saying this. My client went and got the inventory. That inventory is wasted. Client's efforts are wasted. Okay. Money is lost. Why? Because obviously inventory is wasted. So money is lost. Therefore, profits are affected. Very good, Maria. All of this is, I don't care. So, literally, when you're doing audit risk, you need to be sitting with I don't care on your shirt written. Like how today on my shirt, it's Finchartered Academy logo is there. So you need to sit with I don't care written on your shirt. I only care about how will this problem negatively affect the financial statements. Money is wasted, so what? Inventory is wasted, so what? The only problem is that inventory could be overstated. Are you understanding? 50 lakh rupee inventory is there, but because we are operating in a fast paced environment, a little bit of inventory could be damaged. 10 lakh worth of inventory is damaged. Therefore, if you still state inventory at 50 lakhs, you are delusional. Your inventory is overstated. And as the auditor, I cannot allow such a misstatement in my financial statements. So my risk to the auditor is that the inventory is overstated. That's it. Right? Similarly, another example is revenue is falling because of recession. Again, I get funny answers. Revenue is falling, there is recession. Now, answers I get is, oh, company will shut down. Investors will lose their money. Directors will come on the road. I'm not kidding. I literally got an answer where one person went on to say that the director will commit suicide. After that, I was like, that was the last, for that day, that was the last answer I saw. I closed my book. Right? So, revenue is falling, there is recession. How is that going to affect the financial statements? The company will shut down, I don't care. If the company is shutting down, meaning the company has going concern issues, the only thing I worry about is that it is not properly disclosed in the financial statements. So the audit risk is that going concern issues may not be properly, adequately disclosed. How we know inventory is overstated or understated? Simple, common sense. Think about it. If this is my inventory here, if the inventory is in, if the client is operating in a fast paced environment, meaning inventory gets damaged fast or gets spoiled fast. So here I have put inventory worth. Suppose you put inventory worth 5 lakhs. Ritika, right? So suppose you get inventory, you have the worth inventory worth 5 lakhs. But out of that 5 lakhs, if 2 lakhs worth of inventory is spoiled, and in the paper, if you say there is inventory worth 5 lakhs, you have overstated it, not understated. For example, you got 8 out of 10, but in the exam sheet, it is written 10 out of 10. It means your marks are overstated. So if the client operates in a fast-paced environment, the audit risk is that the inventory is overstated. That is, actual inventory is very less because of the damage, and the financial statements are overstated. All right. So we've also looked at business risk and audit risk. Now, a lot of people, the whole reason why I spend so much time on this is because a lot of people give me very cute answers. Please don't give those answers. You need to only look at one thing. If there is a problem, forget how that problem is affecting the business. You need to see how will that problem affect the financial statements. For example, if there's a danger that there's a fire, there was a fire during the year, so a lot of people say, oh, company will lose money. Say there was a fire in the warehouse, oh, all the inventory will be burnt. The risk for the in the financial statements, let's see who gives the correct answer. Very good, Mario. Inventory overvalue. Are you understanding? I hope all of you are. So audit risk and business risk is also one area where a lot of people make mistakes and blunders. And that's why it's like towards the end of the chapter. Now, one simple thing which people make mistakes in, and this isn't very worrisome, but still it's something very basic and simple. Professional judgment and professional skepticism. Guys, I'm going to tell you a fact. And the fact is that, let me just Google a fact. Okay, I'm actually doing this. I'm just going to Google a fact. Now, the fact is, the Great Wall of China, the Great Wall of China, right? The Great Wall of China is visible from the moon. Did you know this? How many of you knew this? From the moon, we can see the Great Wall of China. Now you know this, correct? Yes or no? We can see the Great Wall of China from the moon. Yes or no? Now you know this? Yes, I told you. Now you know. Yes, say yes. Now you people know Great Wall of China is visible from the moon. See, exactly this is why. See, Mariam, you've given the correct answer. You said professional skepticism is having a questioning mind. But this is exactly where people don't apply. Okay, Geo has checked Google. I don't know. But Mariam and everybody else, you are becoming auditors. When somebody tells you something, you will not directly believe it. For example, Mariam, I'm talking to you. You said you need to have a questioning mind. You said professional skepticism is where we need to have a questioning mind. But when I told you the Great Wall of China is visible from the moon, you agreed with me. This is a habit. See, again, many people will come and teach you concepts, theory, textbook, but this is a habit. I don't even blame you. This is a habit that you need to instill in yourself from today, where whenever somebody comes and tells you something which you are not sure of, don't believe it. You need to have a questioning attitude. You need to be, oh, really? How come? Don't you think the earth is too far from the moon? Don't you believe that there is, it's going to be very difficult to see the Great Wall of China from the moon? You need to ask these questions. See, I'm not saying you should doubt people, but you need to ask questions. You understand? You don't blindly believe anything. That is what is professional skepticism. You need to have a questioning mind. Don't, from today onwards, whenever somebody tells you something, don't believe them. Immediately, at least. Have a questioning mind, ask questions, put logic behind things. Yes, Maria. That is what is professional skepticism. And the reason, the very reason why I did this, even though it's such a simple topic, is because people learn, they mug up, they go like, okay, professional skepticism is having a questioning mind. But after the end of AA, unfortunately, none of you still have a questioning mind. Okay, one person did. Geo quickly checked it. I don't know what is Geo's name, but Geo quickly went and checked. So remember, this is all about learning. This is all about understanding concepts strongly and being able to apply them. So we've learned this. That's why I chose this topic now. Because although people understand what it is, they don't apply it. So even if you're dealing with a client, don't believe whatever the client just says. You need to apply professional skepticism. Then comes professional judgment.
Knowledge, experience, and skill.
Yeah, knowledge that you get, through the knowledge that you get, through the experience that you get, you will have some judgment of your own. For example, I gave the same example in my class. I went to the tailor and I said, please stitch my suit in a way that it is perfectly fitting. I said this. And then he had taken my measurement. And I asked him, can you make the trousers a little more tight? Now, I wanted a suit for my cousin's wedding. So I asked, can you make the trousers a little more tight? So he said, look, if I do that, then again, it's a wedding, right? Especially my first cousin's wedding. So I will be with the groom. My cousin is the groom. So I will be on the stage with the groom. So I have to stand a lot, sit a lot, stand, sit to greet the guests. So he said, no, no, he was laughing. It was a little bit of a funny thing he was trying to say. He said, in this case, if it's too tight, you'll find it very uncomfortable. Now, what did he do? He used his experience, his professional understanding of his field, and he applied it to me. So similarly, whenever you are auditing, when somebody tells you something, you need to apply your own common sense, your own experience, your own knowledge to it. You understand? So that is professional judgment and professional skepticism. Then comes the three types of risks which a lot of people confuse against: inherent risk, control risk, and detection risk. Who can tell me what is inherent, control, and detection? This is also a very big problem. A lot of people don't understand the difference between these three types of risks. See, Mariam, you're right. Inherent risk is present before any control is implemented. Inherent risk is in anything, there will automatically be a natural level of risk without any controls. What I mean is, for example, I keep food outside. There is a natural risk that the food will get spoiled. For example, I am doing audit and assurance. Now, audit and assurance is an ACCA paper. It's not an easy paper. So there is a natural risk that I might make mistakes. You understand? So inherent risk is the natural level of risk in anything, especially in risky things, before controls are applied. Give me one. So guys, inherent risk is the natural level of risk there is in anything before you do anything, before you do any control. So before you apply any controls, the natural danger of a misstatement, the natural danger of an error, the natural danger of a fraud is inherent. So if the business is complex, for example, if the business operations are complex, naturally the risk or the chance of risk is high. So if the client's business operations are complex, inherent risk will be high. Why? Because obviously it's complex activities, so naturally there's a chance of more fraud and error. Then comes control risk. Control risk is the danger that the controls that we have implemented. Remember, I said segregation of duties. Remember, I gave the example and I said, if Ramu is doing everything, Ramu might do fraud or error, because if he is doing everything, he is collecting cash, he is counting cash, he is keeping cash in locker, he is dealing with cash completely, there is a danger that Ramu might do fraud or error. So we had a control. What was the control? The control was segregation of duties. So what did I say? There is Ramu, there is Shamu, and there is Mamu. When three people do, the risk comes down. I have a control in place. The danger that my control fails is control risk. The risk that a misstatement can happen because the danger that a misstatement is not prevented, not detected, and not corrected on a timely basis by the entity's control. Basically, the danger that the controls fail to prevent or detect risk. That risk is control risk. Suppose, for example, I said, okay, I have a control, and the control is I will do segregation of duties. Ramu, Shamu, Mamu, I have everybody. I have everyone. But what if Ramu, Shamu, Mamu, all these three join hands and do fraud together? So my control has failed to, my control has failed. You can say it's a weak control. But this danger, this risk that the control fails, the controls that we implement fails, is a control risk. For example, recently I saw this in news where there was a robbery in a certain area. There was a robbery in a certain locality. But luckily there was CCTV. Now the CCTV is a control. Now, by using that control, we should be in a position to detect fraud or error, correct? We can open the CCTV and watch the recording. But when people actually went to look at the CCTV, it's all black. Can't see anything. So I have a control, but the danger that in spite of having the control will not be able to prevent or detect fraud or error. That danger is known as control risk. Are you all clear, guys? Everybody? Finally comes detections. Now, when I check your answers, all these are your answers. Why am I there as a detective? Why am I there as an inspector? Why am I there as an investigator? So that any errors that you make, I should be able to detect it. See, you have made one error here. I have detected it. But I am also a human being, correct? There is a danger that I may be unable to detect. See, here I did not detect this fraud and error. That danger where we are unable to detect fraud or error, we are unable to catch fraud or error, that danger is known as detection risk. So today in this session, I've gone through the textbook. Again, it's a marathon where the idea is to quickly run you through all the important topics, where I've done procedures. I've told you a little bit about procedures. I've done non-current assets, inventory, external and internal audit, chapter 9, very important. I talked about deficiencies. I spent a good amount of time between audit risk and business risk because a lot of people make mistakes there. This is what we did in today's masterclass or marathon. In tomorrow's masterclass or marathon, I will be teaching you to solve a few exam kit questions. All right. And as I said, in the last 3 minutes that we have, it's 7:57 Indian time. I want you to just look at these topics. And again, if you have to rate your understanding on a scale of 1 to 5, how much would it be? You can type. Everybody can do it. Xiaomi is 5. So guys, tell me, like, you've done your self-study, you've done your, with your institutes, you've studied, etc., etc. Victoria is 5, all of you are 5. You can let me know, like, your feedback, has this session, like, again, this is my way of teaching. I don't read anything from the textbook. If you were expecting that, I apologize to disappoint you. I don't read anything from the textbook. Whatever topics are there, my idea, my concept, my way of teaching is I will give you some real life analogies so that you understand the concepts in and out deeply, thoroughly, and you don't forget it. So that is what I do. I don't read, because reading you also can do. Right? Reading you can do on your own. So I don't read anything. But again, you have done this audit and assurance. You have completed audit and assurance in full, right? So I just want, like, feedback from you where you just, I want to hear from you if this session was helpful to you to understand concepts better, simplify concepts, were some concepts simplified, did your grasp of the topics become better? So overall, I want you to share your thoughts here, please. Again, when it comes to question practice, that happens tomorrow. So just share your overall feedback, overall thoughts.
It's 8 o'clock.
Thank you, sir.
Thank you, Ritika. You all, please just share your overall thoughts, overall feedback.
So these 11 topics are important for an exam point of view.
Yes, very 15 topics. In these 15 topics, procedures very, very important. External, internal audit, important. I'll not say very, very important, but important. Deficiencies, very, very important. Section B, deficiencies. Audit risk and business risk, I'll not say very, very important, but definitely important. So again, you can share your overall feedback. Once you share your feedback, you can leave. The idea of the feedback is for me to know, because see guys, we're investing 4 hours of our time. So we want to know if it is truly helping you, because you've already done this. So is it like, okay, same thing, or your understanding became stronger, better, your, your liking for the subject improved, Sometimes audit and assurance people don't like just because of it being theory, but if we give them more examples, they like it more. So overall, you can put your feedback and you can. Once you put your feedback, you can leave. You can put any honest feedback, whatever it is, you can put it. Don't hesitate. Guys, thank you so much. You can bye.